Decentralized finance, or simply DeFi, is transforming the way ordinary folks think about money, investments, and financial freedom. For generations, we've been told to put our trust in banks, brokers, and big institutions, hoping they'd manage our savings responsibly and give us a fair return. But the truth is, the system has always been tilted in their favor. They take your money, lend it out, make their profits, and hand you back just a tiny slice. DeFi flips that old model on its head. Instead of relying on middlemen, it runs on blockchain technology and smart contracts, bits of code that execute automatically with no banker, no paperwork, and no office hours. It's open 24 hours a day, 7 days a week. And it don't matter where you're from. Anyone with an internet connection can take part. That means everyday folks just like you can finally take control of their wealth and put their crypto assets to work directly, all without asking permission from some financial gatekeeper. Now, before we dive deeper, let me give you a little something to get started. Down in the description, you'll find a link to your free DeFi investing kit. Inside, I'll show you how to spot altcoins before they spike and give you tools to start earning passive income the smart way. It's free, it's practical, and it'll save you months of trial and error. So be sure to grab it before you take your first step into this frontier. Now, one of the most powerful opportunities in this new financial frontier is the ability to earn passive income. And when I say passive income, I mean money that keeps working for you, even while you're asleep, even while you're away from the screen. It's like planting seeds in fertile soil, watching them grow day by day, without hovering over them every second. So how do folks actually do this? Well, let's break down some of the most common ways everyday investors are earning steady returns in DeFi. First, we've got staking. Staking is all about supporting the backbone of a blockchain. When you stake tokens like Ethereum, Cardano, or Polkadot, you're basically locking them up to help secure the network. You're saying, I believe in this project and I'm willing to commit my coins to keep it strong. In return, the network pays you rewards, usually more tokens. It's like collecting interest from the bank, only this time you don't need the bank at all. For long-term holders, it's a way to earn while you wait, building growth on top of any price appreciation. Next, there's lending and borrowing, and this one's a real game changer. On platforms like Aave or Compound, you can lend out your crypto to borrowers hunting for liquidity. Maybe they need stablecoins for trading, or maybe they're using leverage to chase higher yields. Whatever the reason, they pay interest, and that interest flows straight into your pocket. No loan officers, no credit checks, no forms to sign. It's pure supply and demand, managed by algorithms that never sleep. You just deposit your assets, sit back, and let the protocol handle the rest. Then we've got liquidity provision. This here's the heartbeat of decentralized exchanges, places like Uniswap, Curve, or SushiSwap. Unlike traditional exchanges that rely on market makers or big institutions, decentralized exchanges depend on everyday folks like you to provide the assets. Here's how it works. You deposit a pair of tokens, like Ethereum and USDC, into what's called a liquidity pool. That pool powers the trades happening around the clock, thousands of swaps every day. By providing liquidity, you're rewarded with a share of the transaction fees. Every time somebody trades in and out of that pool, a small fee gets collected, and you get your cut. It's almost like owning a piece of the exchange itself, collecting tolls from every wagon that rolls through the marketplace. For folks who believe in the long-term growth of DeFi, liquidity provision can be a steady and powerful way to grow wealth. But keep in mind, it ain't without its risks, especially something called impermanent loss. That happens when the tokens you deposited move apart in value. If prices swing too much, it can eat into your profits. And then there's yield farming, the wild frontier of DeFi. Yield farming is when investors move their assets across different pools, platforms, and protocols to chase down the highest possible returns. One week you might deposit into a pool paying in governance tokens, and the next you might shift into another platform with higher incentives. Done right, it can be mighty profitable. Some folks have pulled in eye-popping returns, but it's also a bit like wrangling wild cattle, high risk, high reward, and you better know how to rope them in before they scatter. It takes experience, patience, and a steady hand to manage yield farming properly. Rewards can be big, but the risks are just as high. Transaction fees, volatile token prices, and the constant need to keep track of where your assets are parked can make this strategy rough for beginners. For seasoned hands, though, it's a way to ride the DeFi bull and pull in serious income, if you've got the grit to handle the ride. Now, to make things easier for folks who don't want to spend every hour chasing yields, there are DeFi aggregators like Yearn Finance, Beefy, or AutoFarm. These platforms do the heavy lifting for you. Instead of constantly hopping between protocols and studying charts, an aggregator will automatically move your assets to wherever they can earn the highest returns. Think of it like hiring a seasoned ranch hand who knows which pastures are the greenest. Your cattle still grow, but you don't have to ride the fence line every day. It's convenience mixed with automation, and for many newcomers, it makes DeFi a whole lot more approachable. But listen here, I wouldn't be doing you right if I didn't stop to talk about the risks. Smart contracts, the very code that makes this all possible, can have bugs. And when there's a bug, hackers can swoop in and drain funds in the blink of an eye. Token prices can swing faster than a storm wind on the prairie. And if you're not ready, those swings can wipe out your profits. Or worse, your principal. And if you're providing liquidity, you've got to watch out for impermanent loss. It's a sneaky risk that catches many greenhorns off guard. On top of that, DeFi is still young. Regulations are cloudy, governments are watching, and rules could change at any time. This means you've got to tread carefully, knowing the ground under your boots ain't always firm. So, how do you play it smart in a world this wild? The answer's simple: diversify. Don't throw all your crypto into one basket, no matter how tempting it looks. Spread it out. Some staking, a little lending, a touch of liquidity pools. Start small, test the waters, and only scale up once you're sure the platform is solid. Stick with projects that have been audited, have a track record, and carry reputations you can trust. And above all else, keep your assets safe. Use reliable wallets, preferably hardware wallets or battle-tested DeFi wallets that give you full control of your keys. Because at the end of the day, in this world of digital gold rushing, the golden rule still stands. If you don't hold your keys, you don't truly own your coins. Now here's the truth. DeFi is still in its early days. We're talking about a financial system that's only just scratching the surface of what's possible. It may look rough around the edges today, but that's where the opportunity lies. When a new frontier opens up, the ones who arrive early, learn the land, and understand it first are the ones who reap the biggest rewards later on. Think about the early days of the internet, when folks thought email was just a fad, or buying something online seemed strange. The folks who leaned in, who learned to build websites or invested in those new companies, they became the pioneers of the digital age. DeFi is shaping up to be that same kind of revolution, only this time it's money itself being reinvented. And if you're ready to take that first step with confidence, click the link in the description and grab your free DeFi investing kit. Inside, you'll find strategies for spotting promising altcoins before they spike. Learn how to recognize real projects instead of hype, and get the tools you need to start building passive income streams the right way. So don't just sit back and wait for the future to happen to you. Take control, learn the ropes, put your crypto to work, and let it earn for you day in and day out. Because in the world of DeFi, the old truth still holds strong. The earlier you plant your seeds, the more you'll have to harvest when the season comes. And friends, that season is coming fast. The only question is, will you be ready to harvest, or will you be watching from the sidelines while others reap the rewards?